Well, good morning. Thank you for joining us here on the Market Day Report. I'm Marlin, Bohling, your tour guide to the ag commodities. I want to welcome aboard in studio right here, the one and only Chris Swift of Swift Trading in Nashville. Oh, it's good to have you here.
Good morning.
Thanks for coming in.
That's a fine day out there.
I hope you had a good weekend.
Yes, I did indeed.
Glad to have you on board because we're getting mixed signals and confusing signals out of the trade.
Everything's going on today, isn't it?
Yeah, so I want to bring up this corn board here, and we'll take a look at what's going on, first of all, in the corn market. And our quotes are provided by Bar Chart. Let's go to, Chris, we're going to start with July because May goes into first notice day on Friday, right? Mm-hmm. Okay, so we're going to jump to July. That's where the action is nowadays. And July is down 7.5 cents at 607 3/4. When we looked last half hour, it was down 9. So, yeah, coming back a little tiny bit. December corn down 4 at 5.44 per bushel. Still 7 cents off of its overnight high there. Now, looking at our soybean trade, you have that July contract now 11.5 higher. Wow, that's interesting. 14.60.5 is the last trade. That means we're 15 cents, now 16 cents off of our earlier low and only a penny from our high. Okay. November soybeans now 5 higher at 12.90 1/4. So this is a weird dynamic here. You have corn 7 lower and soybeans 12 1/4 higher. Something's up. Let's take a look at the wheat then. All right, what's it doing? Which one is it going to follow? Well, in Chicago, July is 4 lower. We're at 6.69 per bushel. Let's hop on over to Kansas City wheat. Well, here July is now 2 1/4 higher at 8.27 3/4. But look at where it was overnight. It had been as high as 8.35 1/4, and so we're about 8 cents off of that. Right now, we're trading about 9 cents off of our earlier low this morning. So kind of caught in the middle and 2 1/4, now 2.5 cents higher. Now in Minneapolis wheat, you have July 9.5 higher at 8.55 1/4. That's acting much stronger than the other two exchanges are. And let's look at cotton. July cotton up 110 points at 81.25. December up 125 points at 81.63. So truly something for everybody. Let's start here first with the soybean trade. What do you see happening in soybeans today? Why are they so resilient when the corn is falling on its face? What's that about?
I have no idea. I really don't. I don't have any idea. So I haven't had a chance to look at the bean oil or the bean meal markets yet this morning. And so either one of them would probably have the most aptitude to show you kind of what it's doing and why it's doing that. Okay, let's take a look at that then. Let's look at meal on the soy meal trade. Well, we're higher. Yep. July is up $1.40 at $4.45 even per ton. How about soybean oil? Can it follow along? Well, look at that. It's a trifecta. You have the July now 14 points higher at 53.71. So they're higher, but it's pretty modest. It is. You know, it's not anything earth-shattering. It's kind of interesting why soybeans are so strong. Could it be some spread trading activity? Maybe. What were the funds doing as far as positioning last week? Most of them are still short, I think, to the best of my knowledge. And what I kind of see interesting is corn breaking lower, especially the new crop. New crop corn breaking, it's now at a new low in this decline. And the various varieties of wheat trading higher, lower when, you know, we saw a lot of frost damage and potential damage from that. And then I was a little north of where you were this past weekend, and all the wheat looked great there. I mean, it was perfect, and corn was about 2 inches out of the ground. So variations in the different areas. And I think that's probably what we're all just kind of trading against is 1 or 2 little variations to each market.
I heard Friday, I think it was, that the basis in some areas is really tight in local elevators because, I don't know if it's just because farmers are busy planting, but there isn't much grain moving out there.
No, there's not. And I think when you look at it, there's still somewhat of a friendly situation out there in the grains. Nobody wants to really relinquish a lot of holds. So on-farm storage is probably where some of that grain is that would like to be moved into an elevator or somewhere else. And that on-farm storage is tough to move off of unless that price really jumps up. And we haven't seen a price that would encourage that yet.
Must be a little bit of uneasy attitudes out there about getting the spring wheat in the ground, too.
Yes.
Based on the price here today. We'll pause right here. We'll come back and we'll talk with Chris Swift about our livestock trade post-cattle on feed report when we come back. All right, we're talking with Chris Swift of Swift Trading. Chris, we had the cattle on feed report that came out Friday afternoon after the market closed up. Want to take a look at the numbers and get your thought on this. I'm hearing different opinions on this. The on-feed number came in at 96% of a year ago, just slightly higher than the trade was guessing. They were guessing slightly under 95%. That placements number, though, that kind of threw everybody a little bit of a curve. 99% of a year ago, trade was looking for maybe 95%. And marketings at 99% were right in line with the average. Did you think the placements number was enough off of the mark that it would have been a market factor today or not?
A little bit, but it's amazing the consistency of the feed yard. 11.5 to 11.7 million head on feed for close to 9 months now in a row where they have done that. And we all kind of thought that maybe the month of March and April would be a little bit shy of placements out there. But you look at two factors. You look at price and you look at weather conditions. Price is really, really high and weather conditions are really, really poor. You can see where somebody that might have had intentions to hold something back, grow them a little bit bigger, now they find that they can't, or the price was an incentive enough to say, I'm going to let somebody else fool with these for a while.
So I'm hearing in the central and maybe southern high plains area, they just aren't getting enough rain to even bring the pastures on.
Oh, it's just horrible.
In some areas, it looks dead.
Yeah.
And so I hear there's a lot of cattle actually not going to pasture, they're going to market.
They will, and there is no hay production in those areas, so we have to think from the cow-calf producer side that until we can get hay production, everything to have to buy that hay would be very, very costly, and truck it. You guys truck it from somewhere else, because if they don't have it, then probably neighbors 30, 40 miles around don't have it either.
Well, let's look at prices, and these quotes are from Bar Chart. We'll go to live cattle, and we'll see what they're doing today. After the cattle on feed report here, we opened quite a bit lower, and now we have already bounced $1 and a nickel off of those lows. So June live cattle showing some resilience here. They're 60 lower, but we're back up to 163.92, over $1 off of that earlier low this morning. On the feeder cattle market, well, you have the May contract still down 217. We're at 210.22. It has come back about 40 cents off of its earlier low today. The August is down $1 and a nickel. On lean hogs today, so far you have June $1.52 higher at 87.60. July up $1.47. Real quickly, your thought: have we finally found the bottom?
It's possible. The lean hog index has stopped going down in leaps and bounds, so it's just kind of creeping a little bit lower right now. So, and it's getting a seasonal time frame.
So it's the umpteenth try.
that's exactly kind of like wheat. You know, it's hard to get hogs revived, where it's kind of hard to kill wheat. So
yeah, all right. Well, there you have it. That's how things are opening up this morning. Tammy, I'll turn it back to you.